Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about USDCAD because at the moment we do have quite interesting price action and structure. So first I will be covering the technicals, then we will see what we have from an order flow perspective. Now, starting here on the monthly, what we can see is that at the moment the market has just broken above a very important monthly structure level. In fact, this zone was acting as resistance here, again resistance here, again resistance here, and again here. And obviously, in the past few months, the market has once again tested the area and rejected it to the downside. However, last month, we had the first close above this resistance. In fact, this monthly candle here, as you can see, closed above the resistance. And as we know in the market, previous resistance, once it is broken to the upside, is turned support. So what we could expect at that point is a retest of previous resistance turned support and then a rejection to the upside, which is in fact exactly what the market has been creating this far. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how the market has just printed a nice impulse to the upside, followed by the correction, and at the moment it is trying to create the continuation to the upside. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market retraced exactly to the 0.32 of the Fibonacci taken on this weekly impulse, which, by the way, is the first Fibonacci level to which you expect the market to correct to, especially if you have a strong trend. If you have a strong trend, the market will most likely retrace to the 0.32. before then printing the continuation to the upside. This is what happens most of the times when you have a very strong trend. And this is what we are currently experiencing in this market. Now, what we can also notice is that the market just printed this candle here. Now, when you see a candle like this with a very long wick and a green body, what you usually expect is for the next candle to fill in the wick. The reason for that is that if on the weekly you have a candle like this means that on lower time frames, for example on the daily, you will most likely have an impulse and correction, in which the correction that you have on the lower time frame is exactly the wick that we see here on the weekly time frame. And after an impulse and correction, we expect a continuation to the upside. And this is why the next weekly candle is supposed to fill in the wick. And that is what, at the moment, with the market that just opened, is currently starting to happen. Now, if we drop down on the daily time frame, what do we see? Now, here on the daily, I spoke about USDCAD a few times in the past weeks. I spoke about USDCAD after the creation of this M pattern. I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside for the market to complete the pattern at the previous support and resistance. Then I made another breakdown after the creation of this W. I explained all the reasons for which we could expect this potential rejection to the downside for the completion of the W formation at the neckline. And once again, that is exactly what the market did. And by the way, I will link these two previous analyses in the description, so you can go and check them out for more free education. However, at the moment, what we can notice is that we just printed a nice impulse and correction. As we did before on the weekly, when you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced to the zone, which is in between the 50% and 0.618 golden ratio of the Fibonacci taken on the daily impulse. And this area was also lining up with the previous daily resistance from which all this move to the downside started, which is now turned support here, from which a rejection higher definitely seems a possibility. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CAD, we can see how lately net positions have been dropping massively. We went from having 23.2k net positions down to having 4.2k net positions, with 4.2k shorts added with the last report and 528 longs getting closed. So the CAD is getting weak, and a weak CAD is exactly what we need in order for USDCAD to make this potential move to the upside. So how we could be approaching this potential move. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.